So I just wanted to understand in these different phases, uh, how has co-working space grown? Uh, I mean, as people go back to their offices, has that slowed down the process, or essentially has basically given it a big kickoff after the sort of from the COVID, post-COVID, I mean, the post-COVID period?
Just to give a little bit of history, I guess, on the space, right? I think when 5 years ago, when we started, the term itself, co-working, was this communal working as a concept, which was very much limited to, startups, freelancers, and maybe some MSME type of businesses. But basically, all of the companies that these large tech parks or large sort of office spaces were not catering to, that was the reason why we got into this business, was to try to build an infrastructure and a community for smaller companies to use the network ability or the network effect of being in a space with other startups, and use that to their advantage to kind of grow. And that's how a lot of our competitors also, started their business, and how this sort of grew globally. But I think since then, there was a huge evolution in the kind of customer base, and when we launched in India, we started seeing, hints of these enterprise companies also adopting this model for various reasons, which became, obviously contract flexibility. It became, a cost advantage or cost arbitrage. It became a reason for having one sort of vendor operator or someone outsource the entire office space, requirements. And then also for attracting and retaining the best talent, the atmosphere that we created within our spaces helped these large enterprise not only attract, good talent, but keep them engaged and happy in this workplace, because they had all of these other startups and other smaller businesses around them that created this very like innovative, high energy type of atmosphere that you see within a lot of our spaces. And so even pre-COVID, we started to see the adoption slowly trickling from small businesses to large businesses, but it was still, I would say, in the process of happening. So just before pre-COVID, I would say 2019, 2018 was like the peak boom for all of us in the co-working space, at least in India. It was like the period which we were seeing, sales go crazy, and also we were all expanding, at a pretty rapid and pretty fast pace. Then came, COVID, which obviously impacted the business, in a very sudden way. But it also showed companies, the value proposition that we were always explaining, which was, when things go bad, or when things are uncertain, our model actually works well for your business, because you can actually shut off that cost, or you can limit that cost that you're holding for the period that it is. So it did impact us as operators heavily, but it also showed, members of businesses that were members of ours, why this model actually is, a great model to work with. And so as soon as lockdown started lifting and people actually started coming back, it was actually the smaller businesses, the startups, the guys who were like heavily impacted, who started actually coming out of their houses and coming back to the office first, which was primarily our, target segment, and we started to see like a very quick uptick. And what was earlier the narrative, which was spaces for community and like communal living or co-working, actually ended up switching to flexibility, becoming like the prevailing reason why, companies started to look at our model, and we started to see the adoption from some of the largest enterprises and even some of the most traditional enterprises, because I think flexibility in uncertain environment became like it became sort of a no-brainer when you're kind of looking for office space. The other thing that changed was that the employee's mindset or like employees' ask to the employer also changed. The employee started saying, I now have realized I don't have to be in the office every day. I don't have to travel to like a central office every day. So I want flexibility kind of built into my schedule, and I will deliver the same amount of productivity whether I'm in the office or I'm at home, right? And so for that reason, I want flexibility, and that's kind of where we are right now. I would say as a segment where companies are, definitely in the process of evolving how their workforce operates. Companies have realized there's no one size fits all when it comes to the office, and even the more traditional companies have realized that not all of my space or not all of my workforce needs to be in a permanent long lease type of location. I can actually, take offices as and when I require it for periods of time or in locations in which my employees are staying, rather than asking my employees to kind of come into one, central location. And this adoption or this change, which is happening at an accelerated way, coupled with, I would say, recession, discussed like this recession as a theme across the world, where COVID was one uncertainty, and now this is like the next bit of uncertainty. This actually only added to the acceleration into flex being primarily the way how I would look at my office space versus like a long-term lease today. The other narrative I would say, sorry, that like got broken out was this work from home being a sustainable working model, where people have realized that to build culture, to build employee engagement, to actually retain talent, there needs to be a place where the employee feels like they belong to that organization. And also now because of I would say tighter capital, a recession, and people having to huddle and kind of go into the trenches, the office becomes the place in which they would do that, and the office environment becomes all more important. So we're definitely seeing office being the primary version, primary place of work, and like flexibility of flex spaces being the primary, mode in which.
What is like your current ratio between the larger enterprises and the startups today compared to say during the COVID period and the pre-COVID period? How has the model changed?
So pre-COVID, we were, about 50% enterprise, 50%, I would say startups, SME and MSMEs. Today, we're more like 70% enterprise, and 30%, startups, SMEs, and MSMEs. And, some of like the world's leading startups actually, or leading enterprises like, ICICI Bank, Commonwealth Bank of Australia, Grant Thornton. These are all very, traditional type of businesses that are with us. And at the same time, we have some of like the most innovative, fastest growing startups like Misho, White Hat Junior, all of these kind of companies with us as well. So that would be the split, and I think it definitely marries what is the kind of demand anyway, right, that's exist in the market today.
So, do you see the split in the next sort of 1 or 2 years shifting further towards enterprises as you build larger spaces and grow more inventory?
I don't think that, from where we are today, there will be like too much change, only because, I think that as a brand and as a platform, the way that we build our product is to cater to the entire, like to both segments. And you will see that we have a few competitors that are focused purely on the enterprise side, and then we have competitors who are focused purely on the SMB side, and we are the only platform, I think, that consciously is providing products or providing solutions across the board, and we will continue to do that. We also believe that in India, actually, the startup ecosystem, the growth of startups and smaller businesses is going to be massive, especially with, I guess, all of the macro things working in the country's favor, from an innovation, from a digital stack perspective, and then also from a capital coming into the country, perspective in terms of startups being funded and things like that. So, we will continue to provide space for both of those, and we believe that there will be times where it'll marginally be more enterprise or and less SME, or like more SME and less enterprise. But I think the mix will stay somewhere around the 70-30 type of mix for us for sure. Just as an example, today, like big companies are the guys pulling back versus the smaller businesses, I feel, are actually growing a little bit in the next 2 quarters. We believe like that's going to be the trend.
For enterprises, what is the advantage in terms of, I mean, what is the, you talked about flexibility. So flexibility means what? I mean, earlier they were taking leases of 3 years, 4 years, etc. What would
Yeah.
be the sort of average lease that they take from you, which gives them that flexibility to move in, move out, and what do you offer to them in terms of that?
I would say, flexibility has gone above and beyond just the contractual flexibility. So obviously, contractual flexibility, we give them the ability to choose a like month minimum, to even up to like 7 years. We've done deals across the entire spectrum. So it all depends on like how sure the company is, which business unit, what location, what is the business use case for that company. And typically on average, our enterprise companies give us about 24 months of commitment. This spans from like someone who might even use us for 3 months, and then someone who might use us for 5 years. That's typically what we see, around 24 months of commitment. And flexibility, I think, spans across the contract, period. It spans across location. So being able to have multiple locations under one agreement, or under one, operator, and um, then I would say is the flexibility of mobility. So as a company, if for this next 6 months, you believe your Hyderabad team needs to be strong, like bigger than your Bangalore team, you have the ability to do that. And then if you want to switch back to moving headcount back to Bangalore versus Hyderabad, we are able to do that in a seamless way without you incurring any additional cost or giving any additional creating any additional liabilities on your business. And then finally is the flexibility from a cost standpoint, right? Instead of having a fixed cost in on your balance sheet or on your P&L for a long period of time, when things don't go well for your business, you can shut off that cost when it comes to someone like us. So those are, I would say, the top three ways that at least enterprises are kind of looking at this as a good value proposition.
The other thing is that, after post-COVID, there's been a lot of talk of decentralizing the workforce because a lot of
Mhm.
talent is available. And any case, as we go beyond the four metros, you don't want to have everybody coming to the metros. So you need space, but decent amount of space in smaller cities. So how much has that requirement impelled you to move beyond just the, metros, and how deeper are you planning to go?
So as a brand and as a platform, we, definitely, as a strategy, want to continue to stay in the top six or, eight metros. And we believe that, even though COVID had created this dispersed workforce within the smaller cities, a large population of those are actually coming back for multitude of reasons. One being that the companies themselves are mandating people back into their offices. That social infrastructure in the smaller towns, which is restaurants, theaters, bars, those kind of things are still not in a place in which someone who's looking for like a high enough paying job, wants a certain quality of living, which is with the top six metros, or still have a huge delta over the tier two cities. And then I think the third part is like the pay differential that companies are applying. If you choose to work in a tier two town versus like come into the metros, a lot of companies are actually creating a range within pay as well. So in order for the employees to want a higher pay, I think that they will come back to the metros. And also, I think if you see India's workforce, about 80% is hired by like the top 100 companies or something like that, right? Which have all the executives and everyone sitting within the bigger cities. So that's going to drive people back. However, we do see some enterprises, looking for these entire buildings or like full dedicated spaces in some tier two cities like Trivandrum, Ahmedabad, Calcutta, Chennai, even. And those we are addressing. We will do, these custom bespoke spaces for large enterprises in smaller towns. But as we work as a flex, as a flex space and as a co-working type of business model, we will stick to the top six cities.
So you want it to be like that rather than going for, I mean, the maximum you will do add in another three, four cities, etc. and all where there is.
We don't intend to be a player that goes like, too deep. I think that we spend a decent amount on our product. So the quality of our product and the spec of our product is high, and that adds to the experience that you get while you're at a WeWork. And for order for that to make economic sense, we have to stay in locations where the pricing uh, is up to a certain level.
And that would be where you would like to concentrate on.
I mean, if you look at our space, about 5 million square foot is our entire portfolio.
Mhm.
Uh, you know, uh, Entire commercial real estate across these top six cities is like close to about 750 million.
Mm.
So we're hardly, 1% of the entire market, even in these six cities. So we feel like there's more than enough room to grow within these top metros right now.
What is your target? I mean, how much do you think you would be able to get into these market? I mean, taking in a sort of 2 to 3 year perspective, when obviously the amount of inventory will also grow.
The commercial space is growing at about 45 million square foot year over year. Is the kind of like development and leasing
In
that
these six
continues to
cities, you're
happen
saying?
in India, but it's largely, I would say, 90% is within these six cities alone. So
Mhm.
we will, so in let's say like in a span of by 2028, India would be at about 1 billion square foot of real estate, and we would love to be even 2% of that, which would put us at close to about 20 million square foot.
Mhm. So now you are how much?
Six.
So how are you? Because you have basically around about 6 years to. I mean, if you look at that target. So what is your real estate strategy? I mean, do you? I mean, of course, you have your own real estate. So are you going to stick to your building your own real estate through embassy? Are
No,
you?
we don't. Right now, embassy would be about 15% of our entire portfolio, between 15 and 20% of our entire portfolio. And that would also primarily be like, very much Bangalore centric. We actually have deals with all of the top 16 developers in the country right now. And we're also spread across, India, where embassy is not. And we've consciously done that from the start of like, WeWork's inception, because we believe that we need to be able to provide this product and the service across the country, and also bring value to all of our landlords, and not be sort of like stuck towards one. And it's really worked in our favor, where with I would say with the top 5 to 10 developers, we have strong relationships where we've done multi-property deals, as in we don't just have one location in one building with them. We actually have, multiple locations across their portfolio. So, with Prestige, with Raheja, with DLF, with all of these guys, we have multiple locations across the
These
portfolio.
are what? These are leases for or 10, 15 years, or I mean, how do you
Yeah,
work
they're
with?
typically about like, 10-year leases with 3-year type of lock-ins. And I think a lot of the times, we've now started seeing landlords actually becoming more partners with us,
Hmm.
where we are been able to do, these sort of asset light models with them, which is these operator models. We've been able to do revenue share models. We have the landlords actually investing in the capex of our spaces, along with us. So when when I first started the business, like landlords were scared to even sign a lease with us because they weren't sure what we were like. I remember going to one landlord and he's like, I don't want people in shorts and chappals walking up and down my building. That was like the thought process he had.
Hmm.
And then like today we have, three buildings with the same landlord where he is also investing in the business and stuff like that. So there's been a huge change when it comes to that. So our real estate strategy, like I said, will be again in these top six, 6 or 8 cities. These top 6 and 8 cities are controlled pretty much by these 15 to, whatever, these 15 landlords across the country. So we want to continue to have a much deeper relationship with all of them.
Hmm.
And yeah, I think by adding close to about, between 2 million to 2 to 3 million square foot every year, which we have done in the past, we would easily be able to reach the number that we want.
That should give you the sort of the number.
Mhm. Yeah.
Okay. So that would mean how many seats if you take a or seat has become now an irrelevant.
No, I mean it is still, yeah, it is. It's not apples to apples if you look at it from a seat perspective, because some people use less space for a seat than we do, so their seat numbers look
Hmm.
quite high. But but it would be between 15 to 20 million square foot, I would say, in a period of 5 years,
And what do you have it? What do you have today?
6.5.
So do you look at also the use tech to look at the mobile population, which is actually requiring? I mean, you have the pass and all that.
Yeah,
Yeah.
2 years ago, we during the pandemic, we actually launched, our digital access products, which was WeWork On Demand, WeWork All Access, and our virtual office product. So these are like completely digital first and entirely digitally sort of enabled workflows from the time that someone looks for a space to the time that they actually come and use it.
Mm.
It requires no human, sort of intervention, and it's completely digital. We will actually continue to improve on those products and, are working on continuing to invest in our technology when it comes to that. Second to that, since inception, we've always had our WeWork member app, which all of our members use. This is using technology to access the space, to operate within the space, to raise support tickets and any issues that you might have within the space, as well as a directory for all of the events that we do across the portfolio that you can attend as a member, and any other added benefit of being part of the WeWork platform is all through our WeWork app. And this might include special brand partnerships with other service providers across lifestyle, business services, etc. Platform through tech. That's on the front face of the site, but on the back end, through our design process, through our site selection process, and through the way that we actually operate our spaces, we have now layered technology across each of those. So just as an example, we control all of our buildings through a central command center based out of our HQ, and it actually has an AI machine learning tool that is allowing us to control energy and create savings across both power, water, and HVAC basically within our buildings. And that's completely automated, and we're able to save money over there. We're very much focused on sustainability and being an extremely sustainable workplace. So we use technology a lot for that as well. And finally, even within our building, we even applied sort of air quality and air purifying filters across all of our locations through through a technology solution as well. So everything that we do is to try to create a much better experience for our members, as well as being able to operate in the most efficient way.
To grow around about something like nearly fourfold in these 5 years, what is the kind of investment you will require, and how are you looking at funding this whole expansion?
So we've, over the last, I would say in the last 4 years is when a sizable chunk of our investment went in. So, as between Embassy and WeWork, we've invested upwards of 250 million into the business already.
Mm.
The good part is that over the last, 12 months, the business has been profitable, and is actually generating really healthy EBITDA margins, which is making sure that we don't have to actually raise any capital. So from an operational standpoint, we're like more than comfortable. And as a team, we don't expect to grow too much more because we are just doing a reoccurring rollout every year over year. Um, and the only thing that we actually need capital for is CapEx, which is to go into the fit outs. A large part of which actually we are seeing that the landlords are themselves participating with us, and investing in it. So with all of that, we have a very limited need for fundraising.
Considering you already have uh, a large amount of space which you already have within, how do you have you? What is the valuation today of your company?
If you ask me, it's like upwards of 2 billion. But the last value that we got raised at was 2 years ago. We were global, put in 100 million at $500 million value. And since then, we've not really been revalued or seen any external capital. So it's definitely hard to say.
Okay, so last year value was how much? 2 billion when you raised your.
In my head, it's 2
Okay,
billion.
okay,
But the last value we raised at was 500 million.
okay, 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 okay.
Yeah.
Because you're already profitable, etc. at this moment of time.
Yeah. I think like when it will be interesting when if we go to raise like an external equity round, what people look at it. But
Mm,
it's tough to say, I think, in today's, time with everything going on in the world.
mm, mm, mm. But you said you already made profits, and that sort of
Oh
continues.
yeah.
You've broken one important year, and you are not really going to look at raising
Yeah.
uh, any.
I think it's important to note that, like when we're talking about profit, we're talking about at like till a free cash level, right? Not just at an like building operating level or like a
Mm, mm,
corporate EBITDA level. We've actually like, we're generating free cash at this point in time.
mm, mm.
So
They're making net profit.
yeah.
That's okay. Okay. Okay.
So don't want to get
You-
clubbed in with all.
yeah, there are different versions of profit.
Yeah.
That's why I always ask the, I want to know whether you're net profit or not. It's a
Yeah.
simple.
To be honest, like we even though we scaled at the pace that we scaled pre-COVID, just that one quarter before COVID, we were also profitable. And then COVID, kind of dampened that a little bit. But over the last 12 months and since November of last year, we've actually been profitable. And we've seen that, you know, we've seen that grow exponentially over the last 12 months. So EBITDA itself has grown almost like 250% since last year, while our revenue's grown close to about 80% since last year. So
Do you see that you have built a India model which can be replicated with WeWork in other markets, emerging markets, or each market is different?
we were the first technical franchise for WeWork, 5 years ago. And since then, they've actually replicated our model across, I think it's now 6 or 8 other, regions around the world, where they have realized that having a local operator who understands, local nuances is the best person to actually operate the brand, and operating it globally, with carrying all of that heavy cost doesn't make sense. So in terms of like an operating model, they've definitely replicated what the success of India was, across the world. And we continue to try to help support that, entire rollout. Um, and you're right in the sense that some innovations that we've done in India, we are looking at using across the world. And also the other way where, they've done a lot of stuff in other markets, we're trying to replicate over here and elevate our experience. So that's another advantage of being part of the global platform, is that this knowledge sharing continues to happen, constantly.
Yeah, yeah.
But yeah, I think that countries like Vietnam and Indonesia and stuff like that are now growing for WeWork, they would definitely be able to replicate some of the stuff that we've done over here.
Great. Wonderful talking to you. It was a pleasure.
Thank you. It was
Thank
great as
you.
well.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.